Good afternoon. My name is Kerin, Senior Financial Advisor with Ally Wealth Management. Today, I want to talk about if you have a positively geared investment property and you're an Australian expat. So let's dive straight in. So firstly, we need to understand what is positive gearing. Positive gearing is merely that the costs of the property, being strata levies, water rates, interest on your loans, council rates, etc., are less than the rent that you receive. So you're essentially making more money than what the property is costing you. So when we consider this, what that means as a non-resident of Australia for tax purposes, the ATO will tax you as a non-resident, which is starting at 32.5 cents in the first dollar. There is no tax-free threshold for the non-resident. So they will tax any income that is not deducted. So, for example, if you have a rental property here and it earns $40,000 a year in rent, but the costs associated with owning that investment property are $35,000 a year, then the ATO will tax you on that $5,000. So let's understand how are some ways to reduce that taxable income. So our first way of negating paying income tax in Australia as a non-resident is, if we revert back to my previous example, if you had $5,000 in positive rental income, then you could make a concessional superannuation contribution of $5,000 to offset that tax. Concessional contributions are taxed at 15% as when they enter the fund. However, that is much less than the 32.5% tax that you will pay as a non-resident. So consider if you've got concessional cap available for the current financial year, whether you should make a concessional contribution to your super fund to get essentially a 17.5% tax arbitrage. And second point is to create more deductions. If, for example, you have a preference in future that you might return to your property, you might make some enhancements to that to create additional items on a depreciation schedule. So that will create additional deductions which can be depreciated for the time that you're a non-tax resident. So in conclusion, there's a couple of points there. If you have a positively geared investment property, we can either make concessional contributions to negate non-resident tax, or we could create additional deductions available to the property. Feel free to reach out. I'm happy to discuss through anything more personally about how your investment property and tax is working for you as a non-resident. Thanks so much for tuning in. Feel free to go through our videos on our social media channels, and please like and subscribe. Thanks so much.